Welcome to a new season of Market Makers IL, where we pivot slightly and do a deep dive into the world of private banking. We're going to tell you why, we're going to tell you how, we're going to tell you the details of some of the products. We think you're going to learn a lot, we're going to have a lot of fun, and we hope you do too.
And still, no suits, no ties, and we'll leave no question unasked.
And we'll be talking about conversations that talk about shekels.
And some dollars.
And no investment advice. Welcome to the second half of Season 2. This season has been guided by two parallel goals. The first is to spend more time on the core elements of private banking and the strategies that set EFG Wealth Management Israel apart. The second is to develop EFG's 2026 top 10 themes and place them in an Israeli context. This is our second installment of the themes-based focus. In Episode 6, we looked at Theme 10, the return of the IPO market. In this episode, we explore Theme 7 in detail. So, Michael, remind us all what Theme 7 is.
So that's EU revival, restructuring, and reform. So I would say that specifically, one of the key takeaways is that Europe is committed to increasing its defense spending in 2026, and not only this year, but also for many years to come. So the outlook was written in November, and global geopolitics tensions also
Have come down significantly since then, right?
Yeah, exactly. Especially now, with Trump expressing a lot of dissatisfaction with the NATO partners. So no matter where you fall into the geopolitical and political spectrum, there is no question that the European countries will increase their defense spending. So just to put some numbers in perspective, 23 out of the 27 EU member states are in NATO, and 16 of them have defense spending above 2% of GDP in 2024. This will increase in 2025, and they're going to get to more than 5% by 2035. So this is clearly a big trend, and extra spending is being tolerated even with all the pressures on government spending. So,
well, all of this is to say we cannot be more pleased to be joined by our two guests today, Yonah Lloyd of Stratasys and Amir Weitmann of Champel Capital. We're going to explore the theme and its relevance to Israel. But first, let me introduce our two guests. Yonah serves as the Chief Communications Officer and the VP of Investor Relations at Stratasys, a NASDAQ-listed additive manufacturing or 3D printing company. Valued at $720 million, it's a leader in the space. He's got extensive experience with public companies, having raised over $4 billion that led to approximately $20 billion in exit value. Yonah's got a unique background, and this is when I first met Yonah. He was a legal guy, Bronx DA, specializing in narcotics and related crimes. He left a life of crime, fighting crime that is, to join the tech revolution. Started at Net2Phone, which went public. It was a voice over IP technology company. Then he moved to Israel, worked at SodaStream, helping lead the IPO. And I think he did their first ever Super Bowl commercial, which is, I guess, the entire marketing budget for a year for some companies. Then he moved to Mobileye, where he helped manage Israel's largest ever IPO, was the Chief Communications Officer and a Senior VP of Business. He sits on advisory boards, including Innoviz, which is a LiDAR company based in Israel. He's been on CNBC and Bloomberg, which means that this is a real downgrade for him, but we're really glad you're here.
Great to be here. Thank you.
Amir is a managing partner at Champel Capital, a VC investor in Israeli technology, with a new fund dedicated to the defense sector. I first met Amir a couple of years ago when I realized he was an investor in almost every single startup that our firm had found interesting enough to highlight to our private client investors, which means either we were all right or he had a nose for going after the puck or the ball, depending on what sport you like best. Despite not having the largest fund in the country, he's also found a way to include very, very well-connected and respected entrepreneurs and thought leaders on his team. This was true with his tech investments with a guy named Dadoun Waldman, and it's true now in the defense department as he has Giora Island as a partner in his current fund. And so I think the insights we expect to hear from the two of you are very deep and wide, and so good luck to you guys to make sure we meet our own expectations. Amir's private market knowledge and Stratasys' portfolio of business in aerospace and defense and public market activity are, I think, going to be really demonstrative of what's going on in the defense space today, and we cannot be happier that they're here with us.
So, Yonah, tell us a little bit about Stratasys and, as a company and your role there.
Sure. Well, so Stratasys is the world's largest high requirement 3D printing company. And for those who really don't understand, 3D printing is creating objects from nothing, typically using layers of activity. And it actually invented the world's most popular 3D printing technology called FDM. but also we have 4 other technologies in the portfolio. And when I say high requirement, it's been a journey because Stratasys is almost a 40-year-old company. And 3D printing really started as a prototyping business, but it has evolved and is currently evolving even quicker into technology that's providing end-use parts. Stratasys focuses on 5 areas: aerospace and defense, which is our largest and fastest growing sector, automotive tooling, healthcare, for example, preoperative solutions for patients, dental, and as well as industrial components.
So, thank you. That's super interesting. So the company does not break its revenues in its defense sector, but it's made reference to double-digit growth in its end market compared to low single-digit expected in the overall business. So there's been a nice win with the U.S. DoD, the Department of Defense. So what else can you tell us about this win?
Yeah, so there's been actually several, it's been an iterative process with the U.S. military. I would say that sort of kicked off in 2021, where after 18 months of activity trying to come to terms, we agreed with the Department of Defense, or now the Department of War, to supply them with 25 of our top-notch FDM printers to be deployed globally for NavAir, which is kind of like the Top Gun, from the Top Gun movie, the air fighters. And what was really, and it was a big deal, it was like $20 million. It was our biggest deal with the military at the time. And what was exciting to them was the fact that they could now deploy parts worldwide as needed instead of having to hold inventory, because our inventory is in the cloud. It's digital printing for old aircraft as well as new aircraft. And you can place these printers anywhere. So what's really interesting to the military is that you could forward deploy a 3D printer in the heat of battle and be ready in case there's a need. So you could have it on a ship, you could have it out in the field, et cetera, in case there's need to be ready. So they've deployed these printers worldwide, and they're primarily for the NavAir defense. And that was also a technologically important moment in time, because kind of until the early 2020-21 period, most of what we did was prototyping. And today, that is shifting. The revenue sources are shifting dramatically out of prototyping into manufacturing parts. So that was kind of a really strong kickoff. And from there, and then we hired an ex-Marine, a fellow named Foster Ferguson. And Foster was a 20-year Marine officer, logistics specialist. And he came in and really began to parlay our relationship on Capitol Hill. And at this point in time, Stratasys is, I believe, the largest provider to the United States military across the Army and the Navy and the Air Force, as well as to pretty much all the tier ones, Lockheed Martin and Raytheon and Northrop Grumman and General Atomics, which is a big drone company in the U.S., et cetera, for U.S. opportunity. And where that's really evolved is how the military has evolved, especially with drone warfare, which I hope we'll get into a little more today.
I have a question there, though, which is you talked about the technology being in the cloud, but the printers aren't in the cloud and the materials aren't in the cloud, and you're making, at this point, mission-critical, let's call them spare parts, if not original parts. Who's there when you're making these? Like you're shipping let's say you're shipping it to the Middle East. For the Middle East, we call it a theater, right? Is there somebody from Stratasys there helping them make sure this stuff is coming out? Or these guys have learned enough and they've got enough inventory of the raw material, whatever it is they're using, on site that they can make it and they're good to go by themselves?
Exactly. Yeah, we're not putting Stratasys people in the field, but yes, there's training programs that we have on a regular basis with the various components of the military that we're working with. They're kind of unique in that, like you'll go out in your car, and if your windshield wiper isn't working, that's okay. If it's not raining that day, you'll drive the car. Military doesn't work that way. Every single part needs to be accounted for. It needs to be proven. It needs to be ready to go. But parts break down. And so the advantage of having a 3D printer locally is exactly that. As parts break down, and they know what parts we're making. So if we're certified to do 3 dozen parts on a particular aircraft, and we have and there's someone trained to use the printer on the aircraft carrier, that aircraft comes in after a mission or after an exercise, and pilots usually know right away because they're so in tune with what's going on with their aircraft. and then the part is ready for there. If they didn't have it, they would have to have inventory stored on the ship, and they really don't know which parts are going to break down. So now you're talking about a major change in ship real estate of not having to hold all these various parts anymore. You just print them as needed. Interestingly, you'll see the same thing. You'll see Stratasys printers on the track at Formula One races.
I was just going to go there, but
Oh, were you? Okay. That's a
just
great
'cause
example.
I'm F1 crazy because I know that those drivers also, they know they can feel when anything breaks.
Yeah, and they don't know what's going to break, so they don't need a big closet of 100 parts there. And so they'll radio in, hey, I need a new ABC. And there's going to be a guy like printing, because they're small parts. And like he does 3 laps around the track, and okay, here you go, that kind of thing.
So practically, what can you tell us about the driver of this growth, like in terms of products? Because I can sense that there is a little bit of like aircraft products and all these kind of things, but what can you tell us? Products or application type or maybe even geography? What is?
Yeah.
What can
So
you?
it is-
What are you allowed to tell?
No, it's primarily aircraft, and frankly, it's primarily drones lately, loitering munitions. I know that we've shared that in 2025, we have an arm of our business that doesn't just sell printers and solutions. We also make parts. So we'll receive files and print parts for customers. And in 2025, our top 3 customers in this area were all U.S.-based drone companies, neoprimes they're called, like big ones. You probably know their names, but and so we recognized early on, because we're making these parts for them as they're building their businesses, as they're building their next generation aircraft, we kind of have our finger on the pulse of where the industry is going, not just where it is today. And I think an important point to be said here is that you have to remember, only additive manufacturing can handle this type of a process where it needs to be iterated quickly and manufactured quickly. Why waste time and money on like a big chunk of metal in CNC, and you're going to spend all that energy and time in building something? The drone industry is moving at breakneck speed. And so they're not going to make 500,000 parts today because they already know that in 3 months, those parts are going to be obsolete, that kind of thinking. So it allows them to go much, much faster as they're moving that industry forward.
Let's switch gears and go to Amir for a second. First, why don't you just tell us a little bit about your investing history, where Champel started, where you are now, and kind of what your focus is and what you're looking at.
Right. So thanks. So we started back in 2017 with my friend Ari Ben-Gigi. So Ari actually and myself, we were in kindergarten together when we were 3 years old.
I always say that about Israeli entrepreneurs. They start in kindergarten, then the army, but then they're in kindergarten.
So that was, but that was in Switzerland, back in Geneva. And in 1978, we're 50. Ari is 15 days older than me. So he's the older guy. I'm the young guy. And we are best friends ever since, literally. So that's a long time ago. And he was working in. I came on in Israel. I came to Israel back in 1998. Been working in finance. I was in Bank Hapoalim at the time, and he was managing a hedge fund in Geneva. He did well. So back in 2017, he told me, let's do business in Israel, invest in the startup nation in tech. So I left the bank and we started working together. So originally it was his capital, and then we grow, family, friends, etc. First fund, second fund, we deployed around $50 million in 22 companies in Israel, all of them in Israel. We have one very good experience in defense. We invested in a company back in 2017. When we invested, the company had maybe a couple of $100,000 of sales. And we're looking to reach, hopefully, north of 100 million this year. So it's quite massive creation.
Not still a private company?
Yeah. It's still a private company. It's quite significant, I would say, creation of value. So specifically in defense, but we've had different experiences investing in medtech, investing in food tech, as you mentioned. We invested in Remilk, doing actually very well. The product actually went
We see them
well.
everywhere now.
Yeah, it's amazing. The product finally took a long time.
Took a
But
long time, 'cause I saw them.
It took a long time. It took longer than we expected originally, but that's life. And
So you've got a long time horizon with some of the stuff
yes,
you're
this
doing.
is VC. Yes, this is VC. We anticipate essentially in some cases a decade. It's It's long, but that's what it is. So, Remake is an example, Aleph Farms another, and we invested in other companies in as I said, in medical devices. We invested, for instance, in a company called Victorious, which we sold half a year ago in September last year for almost $500 million. We invested, the company was worth 22, 3 post money, something like that. So we did very well. We've had 4 exits already on the first batch of 14 investments, and a few more to come. So I think we're doing well. Second fund we did in 2022, and 8 companies, some of them doing very well. So we're expecting also to do quite well on the fund. But of course, these things take time, and it's not. This is VC, and you have to admit and be ready for relatively long-term investment. It doesn't mean it's always long-term. We've had 2 exits in 2.5 years, doing not bad. One was a water tech company.
Oh yeah, you told me about that.
It was interesting. We invested in 2017, and we actually had an exit like a week before the corona, or very early 2020. It was February 2020, late February. So it was literally a week before the country shut down, and we managed. We had this exit, and then another company also where we invested and quite early, and he became. We had an exit also very fast. So these things happen, but I would say they are outliers. Generally, it does take a few years, and ups and downs. Some cases have been, very, very sad, I would say, because sometimes you lose money. This is part of the game. But this is a game where you want to win big. And if you do win big, then the wins are going to compensate for the losses. And as a friend of mine always says, at the end of the day, you cannot lose in this game more than what you invest, which is important to understand, because in the P&L, if you understand that the upside is essentially pretty much unlimited, then if you get one, certainly 2 winners, but even one winner, one big winner, then all the losses really don't matter so much. If you have, for instance, in our fund, we have one company which is starting to pick up very, very, very significantly. And if even this year we're going to do what we're expecting to do, then just this company is going to return our entire fund probably a few times, depending on how successful it's going to be. So this is how we look at it.
So where are we now with defense? Because I think
Right.
we started talking about this with each other probably about a year ago.
Almost a year ago, yes. So we started talking, pretty much at this period of the year last year. And I can't say it has been easy to raise capital in between wars and all the political environment, which has not been conducive to, I would say, calmly raise a fund. But we're getting there. And we actually got matching from, I would say, a government entity, $1 for $1 up to $100 million. We have a significant pool of followers. We still need a lead investor, which we hope we're going to finally get soon. It's not easy to start this because of the circumstances. But we believe that what you said, Michael, before is correct. In other words, what we're facing here is not something this is not a trend, right? This is a structural shift in public spending in defense and security. This is a trend that's going to be here for 10 to 20 years at least, because this is how these things work. It doesn't work for 1 year, 2 years, 5 years. And this being the case, we're anticipating actually only being at the beginning of this wave in terms of technologies, in terms of changing the whole landscape. Drone, of course, warfare is the most significant example, but this is only one example. It is important to understand that the entire battlefield, and by the way, it's not only battlefield, it's battlefield in the much wider sense of the term. It's not only the place where people shoot at each other, it's security needs. In other words, how do you protect your national infrastructure, for instance? How do you protect, internal security, police, from all kind of threats? How do you protect? How do you find, for instance, if we're talking about, public enforcement officials, police, right? How do you identify criminals? We're talking about financial crime. We're talking about a lot of things which have become very, very different over the past few years, and that if you want the attackers, the crime offenders, they have become themselves technological, and you need to, and it's an arms race really between defense and offense, as it has always been in history. But because everything is becoming more and more technological, then what we're seeing is that this defense tech industry, which just a few years ago existed but was very burgeoning, was very, very little, and people didn't want to invest because it was not ESG, whatever, to invest, and everybody's going there now because we understand that this is the key to actually protecting our freedoms. And it's not a political issue. I want to make this very clear. This is not a left, right, this or that. This is simply defense, and pretty much the entire Western world, it's not only in Europe, by the way, it's the entire Western world, it's all NATO members, but beyond, are on board with this stuff.
So just to get where you are right now, are you actively already looking at the companies in the space and you're ready to write checks? Where are we right now? And what are you seeing? Like you talked about it being way, way beyond drones, but like what's Israel best at right now? If you look at what's out there and what you would love to jump into as soon as you get your anchor investors set up.
Right. So, of course, we're looking at. We've got a long list of companies which are waiting for proper due diligence, and once we have the money, then probably within a quarter we're going to start, or less, but certainly not much more than a quarter, we're going to be starting to write significant checks. That's where we are. In terms of what we've been seeing, we've seen, as I said, for instance, we've seen a very interesting company where we're having an SPV in video recognition, facial recognition, and beyond. That's fascinating. And it's being used, it's going to be used by police forces globally. And it's not only police forces, it's secret services, pretty much anything like that who's looking to pinpoint individuals.
Sounds like James Bond stuff.
Yes. Although I have to say, I'm not going to be very specific because you know the people who I'm talking about, but I've heard people who are, I would say, who used to work in Israeli secret services, and the story they told me really makes the whole James Bond story very, very
Boring?
The reality is way, way more incredible.
You touched on this, but I want to ask both of you. Yonah, you touched on this in your answer. Time to market. I was an analyst back in the days. I covered a components company that got designed into a U.S. Military aircraft product, and it was designed in 10 years before it got made, and it's a 30-year revenue stream for the company once that platform gets deployed. But now you're talking about working with startups. You're talking about a much faster time to market. You're looking at stuff which is much faster time to market. Let's talk about just time to market and how it's influencing both of you. Maybe start with Yonah.
Let me throw out a data point because it's really important to understand the demand environment right now that's driving the need, right? You've got a Department of War which is sitting on a back order need of well over 35,000 parts. And the DLU, the Defense Logistics Unit, has over 4 million line items in their budget, okay? But like I said before in the example about driving a car without wipers, they're not going to send an F-35 up if it's missing one piece. And having back orders is mission critical problem. And if they can't, and the whole thing around what makes additive exciting is because it modernizes a supply chain. It reduces the crunch. We all went through this with COVID. We went through it when that ship was stuck in the Suez Canal and the world panicked because you just couldn't get your stuff. And so you've got a department that is saying we need to get these parts immediately. And so that is what's been driving them. And just let's zoom out for a minute into the sort of back up into the environment that we're working in right now. And you can kind of really get a sense of where the drivers are coming from. You've got a Trump administration that has just announced they want to build a budget for 2027 of $1.5 trillion. It's unparalleled. It's like over 40% higher than the previous budget, right? And last week they talk about 75 billion of that just for drones, right? It's a lot of money that needs to be deployed. You've got, like I said, you've got back order issues with the DLU. You've got, I know you were talking about the VC environment and raising money. I'm juxtaposing that to what's going on in the capital markets, the public capital markets, which is a completely different story. You've got just in Israel. If you look at the Tel Aviv Stock Exchange today, who's the largest company? It's Elbit.
Second largest, no?
No, largest market cap is Elbit, not a bank, not an insurance company.
They went
Their
past
stock-
Bank Leumi?
Yep, their stock is up 80%
Okay.
over the last year. And then you've got this little company right underneath them. They're doing about 170 million in revenue and trading at 58 times revenue. Next Vision, okay, which is a $10 billion market cap today. And so in the public markets, and even in Israel, you've got the IPO story coming up. Raphael announced, government entity, not only announced it, but now they want to accelerate it. They want to do a private placement to move quicker, and they want to expand what they can sell from 30% to 49% of their shares. So they see the capital demand out there. You've got IAI right on the heels of that, saying the same thing. You got companies like Uvision, right, which just did a deal with the American government. It's called an IDIQ, indefinite duration, indefinite quantity, of close to $1 billion, right? Loitering munitions, right? Drone company, all going public. And the existing companies outside of Israel, all the ETFs and all the mutual funds that are defense-oriented, everybody's up 50 to 80% in the last year.
Oh, that's the global story.
Yeah. So the global story resonates. The capital markets are pouring money into anybody. Joseph, you'll remember
What
the
does that do to
days.
your design win?
the
Meaning,
internet-
if it took 10 years to get a design win or 5 years to get
Right.
a design win,
much quicker now.
and so they've adjusted also.
Absolutely.
Even the big companies.
Because the need is there. And the
Right,
two key
exactly.
wars that have taken place in the last few years, Ukraine, Russia, and what's going on in the Middle East, has spurred that even greater. And Michael, you mentioned earlier, NATO's rising their GDP from they're all at 2% today, by the way. All the NATO countries are 2%. They want to get to 5% within 10 years, right? 2035. So it's just getting started. It reminds me of like when, Silicon Valley was hot and everybody realized that software is important, or it's going to run everything, it's going to drive everything, and it still does. Okay? Defense, as you mentioned, the good guys, bad guys. I mean, it was like rocks or spears, who's going to win? And now that's where we're at on, moving that drone so it's a little bit faster, so it can go a little bit further, so it can carry a heavier payload. Counter drone technology is no less important, right?
It's a
So
never-ending.
It's never ending, and I think 10 to 20 years is it's more than that, because this is global geopolitics. It's not sector-based. It's not trend-based. It's humanity-based, and
But that
for good or
was
for bad.
So
if
I
that's
have
what's
to
gonna
rebound
be.
on that.
Yeah.
So what you're saying is, of course, true, because this is the story of mankind, right? This is thousands of years of measures and countermeasures and fighting and defense and offense. This is always true. But what has changed? What has changed is that we are again in a period of instability, as you mentioned. So we don't know what's going to be in 20 years, because maybe instability will stop, in which case it will kind of be less significant, and people will less feel the need to pour resources into developing these technologies. But it doesn't matter for that, as far as we're concerned, because even if we're long-term investors in VC, I don't have a 20 years horizon.
Of
I
course.
do have a, say, 10 years horizon, and this is, I think, the only play I can remember where I have actually visibility over 10 years. Because everything that I've been doing over the past 9 years, and that I know that other people have been doing, well, it's bet. It's a bet, this, that, and you think it's going to go that direction. Sometimes you're right, sometimes you're wrong. That's fine, but here, there's very little to be wrong about. I know these budgets are going to go from 2 to 5%. So you could say, well, maybe there's a risk that in the end, the governments are not going to hike their budgets, maybe, but it's highly unlikely.
Correct.
It's highly unlikely, and therefore, what I have is a cash flow pretty much secured over the next 10 years that we know is going to go in a certain direction. And this is pretty unique. So if I'm looking at the entire global investment scene today, I don't see anything else, including AI, including this and that, and all these interesting buzzwords. But I don't see anything where I have this level of certainty that capital is going this way. And that's why I'm extremely bullish. We are extremely bullish on defense and security, because structural shift, because all the things you said, which are all correct. But beyond all that, it's because this is not so much of a bet, in the sense that.
So you're not worried about peace?
He started very optimistically.
I think that at this
give him
point,
that.
even if there is peace, this is not going to so much influence the next 10 years. What's going to be in the next, 20 years, it's a different story. But until 2035, I think that unless something cataclysmic in the good sense of the term happens, it's very unlikely to believe that this money is not going to go there. And even if it goes a little bit there, let's say a little bit less than what we're anticipating now, doesn't really matter, because the amounts are so incredible. And you have to remember there's a base effect. In other words, 5 years ago, or even less than that, 4 years ago, before Russia attacked Ukraine, all the defense budgets everywhere were, in the best of case, stagnating or being reduced. And nobody had even patience to consider investing in this field. I remember I told you that we invested in one company, and it was very difficult back in 2021 to raise capital for it. In the end, we did manage, but it was like crazy to find. And remember, 2021 was a very strong year for VC and for the global investment outlook, and it was just almost impossible to get the money. And finally, we got one Israeli fund who accepted to put money, a few $1 million, and that kind of saved us at the time. It was great, but when you think about what happened afterwards, I mean, these guys made a tremendous deal, but it was very difficult to get the money. It was very, very difficult to get the money, because it was just not trendy, and people were in ESG, and who wants to invest in defense, blah, blah, blah. And now, a year ago, just literally a year ago, the Norwegian sovereign fund, which is the largest in the world, they manage, I think, now like $2 trillion.
Yeah, the Norges Bank. Yeah.
Right. It's crazy. It's huge. And a year ago, they decided, after, 17 years, that it's okay to invest in defense. And that it's ESG really to invest in defense. Well, of course, so long as they could afford, to look at others. Whatever. So long as they could afford to say, well, it's not our problem. So, they're looking at these people, that people, this country, that country, including Israel, saying, oh, this is not good to invest in defense. And this is not, this is not moral, blah, 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 until war actually came closer to their own borders. And all of a sudden, their so-called moral stance changed, because they felt at some point that this is not. It used to be, I would say, luxury opinions. We don't want to deal with defense and security because it doesn't concern us, and it's war is bad. Fine, great to say. We all agree, right? War is bad, but the question is, what do you do when war comes to you? And as soon, essentially, as war, 2 years after war came to the region, to Europe, then they changed their policy. So I'm not talking out here about politics or morality. Let's put this on the side. I'm talking about business, about money. This is the largest sovereign fund in the world, and all of a sudden, their resources, which are very significant, as I said, $2 trillion, are also available to invest in this field. So it's mostly going to public to public stocks, but this is just showing that this industry is going, and it's going to go everywhere. It's going to go to early stage, to private equity, to public, to everything.
One thing on top of that, by the way, is we can't forget the impact of China in all of this. because the Western nations, the NATO nations, and by the way, not just NATO, we're doing a lot of business with India, for example, on this. China is the world's largest manufacturer of drones by far.
Is it not Turkey?
China.
Okay.
China today. And of course, the Western nations need their own sources. A big benefit, by the way, for Stratasys is that our componentry is already certified in the military, and we're not a Chinese supplier. You can't imagine that Western nations are going to look to China to supply. In fact, I think about a week ago or so, a piece of news came out that someone in the UK realized that in some exercise in Kenya, they had used some Chinese 3D printers. And that's it. Now there's all this interrogations going on, and because it's a security issue, right? And so with the advent of Chinese influence on warfare worldwide, companies like ours and capital deployment into defense tech to counter that is also another strong layer that's supporting the argument you've made.
Amir, going back to Israel and the defense sector here, where do you see the strongest? Where do you see Israel is the strongest in terms of innovation within the sector? That's the first question. The second one is about the people. Where do we see the talent coming from? Where the entrepreneurs are coming from? Is it people from the military, or is it more like tech people moving into defense?
Right. So I'm going to first answer the second question. So Israel is, unfortunately, it's because of our special circumstances, Israel is a very unique case globally, because Israel is the only country where you have, on one hand, a very, very strong ecosystem. It's number one in the world per capita in terms of both money in and money out, and highest number of unicorn per capita, etc., of investment per capita. So on one hand, very strong ecosystem. On the other hand, you unfortunately have this real-life war going on pretty much forever. It's not only the last 2.5 years, it's a constant state. And you have this Israeli specificity that everybody goes to the army, which, having a conscription army, you call that in English, right?
Yes.
So whereas now, and for a few decades now, most countries in the world have moved, including the States, by the way, since the late 60s, early 70s, America moved to an all-volunteer army. And this is true. This has been true for France, for instance, since the 1990s, for England, et cetera, et cetera. So you have a population which is not trained and sensitive to security and defense matters. And you don't have this pool of entrepreneurs who have real-life experience. And that includes the United States. This is unique. So you have Ukraine, where now you have a lot of entrepreneurship, specifically in the drone area, but Ukraine is not a first world country, as much as we see them as being our allies. But we have to remember that prior to the war, not talking now, before 2022, the GDP per capita of Ukraine was one of the lowest in the entire European continent. Was like $4,000, $5,000 a year, right? That's $400 a month or something like that, right? And certainly the VC ecosystem in Ukraine is nothing to compare with the Israeli VC ecosystem. It's nothing to speak of, right? No, it doesn't mean there are not good people in Ukraine. They are. But they're not. These people are not now building unicorns. They are building other stuff to try to have their countries survive in the face of the Russian onslaught. So, whereas in Israel, you have this specificity of having the entrepreneurs fighting, and then they go home, and then they are going to their offices. And they say, okay, let's create the next unicorn. And they do. Yeah. They actually do. And this is unique and does not exist anywhere else in the world. And when I say anywhere else in the world, I insist this includes Europe, and this includes America, and this includes China, and India, and any other country in the world where you have a significant ecosystem. So this is the very, very unique comparative advantage that we have in Israel. This gap that we have in our favor is never going to close, probably. I don't see anybody being able to again, these are circumstances, right? But I don't see anyone in the next 20 years being able to close this gap. So it doesn't mean, of course, that you can't have good defense and security startups everywhere else in the world. Of course there are, right? Palantir and some huge stuff, right? But in terms of the sheer quality and quantity and diversity of what you have coming out of Israel, it's very difficult to see anywhere else in the world being even close, frankly. Because we have soldiers who actually face all these real-life problems, and then they come home and say, okay, let's find solutions, right? And they've lived that through themselves, and this is something very unique.
You know, to circle back, by the way, Joe, on your question, I think regarding cycle, okay, and keep in mind that war fighters can't work on approval timelines. They work on mission timelines.
Right.
And the government's recognized that, especially due to the conflicts that have taken place in the past. And so they've been much more invested at much higher levels than ever in looking to technologies like Stratasys, looking to digital, forward-proof, future-proof types of technologies to get them where they, not just where they need to be now, but where they're going to need to be years later, especially in the competitive market that it is.
100%.
I think it's different for public companies and private companies, but Yonah, maybe you can, you've got resource allocation, you've got teams of people dedicated towards serving very, very large U.S. defense companies. You named a couple of them, and now you've got a growing playing field of smaller companies, smaller teams. How do you change the companies? I don't know if it's changing the DNA, but how do you go after all of these opportunities with the resources that you have and different selling cycles and different size teams when you're working on with all these new customers?
Yeah. Deal prioritization is always important in terms of managing your resources and where you're going to put your R&D money and your SG&A money, et cetera. Clearly, the U.S. military is a priority for us. We actually opened up an office in D.C. recently to make sure we have somebody local on the ground. But again, as I mentioned earlier, some of these smaller companies as well are growing very quickly. They're being well capitalized. Some of them are planning to go public, so they're going to be even better capitalized. And again, it goes back to the leadership team in our key accounts, which is, again, this fellow Foster who runs all of our military business as well as our key account business, to sort of be both proactive and reactive, right? Because we do get a lot of inbound requests. It's pretty generic. I mean, it's like any other business. When you're hot and you've got a lot of interest in what you're doing, you've got to understand, looking at their business models, looking at who they are, what their plans are, what they can afford now, where they're going, and then determine, am I going to put time and effort into each one? So it's kind of case by case. But again, given that we work primarily with the largest players in the world, the tier one suppliers in the industry, that takes up the majority of the time.
Okay, question about investor sentiment, maybe for both of you. Is there a pushback on Israel right now, or are we, past that with your, I would say, core investors? And maybe the second aspect, and you mentioned about ESG before, people are looking at defense differently. But within defense, do you think that there is a bit of a difference between defense and offense? Maybe is it an easier sell to talk about defense solutions? So those are maybe.
It seems pretty obvious that investors want to make money, and they recognize the value of experience. And so, at least from what we're seeing from the public side, it's the opposite. The fact that Israel has so much experience, and not only that, but so much success in executing their warfare needs, that the investment community seems to be rallying around the Israeli companies. And I believe that those who are planning to go public are expecting to see the same reaction, that it's going to be very positive.
Right. So it's both. In other words, there are some people who do push back on Israel and on offense. We've heard that. But at the same time, you have many, many other people who want a piece of the cake. So this is not a contradiction. Some people like that, some people like that. But the reality is the world is a big place. There are enough investors who want to do this because they understand that there's value and that they will probably be doing very well over a period of time.
So we started this episode with comments on Europe. We talked about increased spending in Europe. Let's come back to Europe so we can kind of wrap this thing up. Are you seeing interesting things happening in Europe? And I want to span.
What do you mean? What do you mean?
I want to span. Is there interest because they're buying stuff? Is there interest because they're creating things? Are you going to see investment opportunities? Are there European companies that are coming and are re-accelerating their own investment? There's a German company I can think of. There's a UK company I can think of who are in the space. And so I'm just curious kind of what kind of activity you're seeing there compared to the US and the Israel investment, which I think we all know is obvious.
Well, so of course there's something happening there. But I have to say that it's very concerning to see that I think the level and the depth of what's happening there is really not where would be expecting it to be in a period of stress. But that actually goes back to what I said earlier, which is that these people don't have, in Europe, they don't have the background to create in this field so much. So you have some technologies which are coming out of Europe, which are dual use, and actually going not from the military to the civilian, but rather from the civilian to the military, and this is easier. Mm-hmm. But stuff coming purely from the defense and security space, of course you have some companies because you have over 500 million people in Europe. You're not expecting to have nothing. But I would say that the level, the depth, the quality, it's not. Yes, they are, but it would be difficult to have a good fund only based on European stuff.
I can tell you the demand is growing from our end. For example, BAE Systems, right, which is the largest defense contractor in the UK, is a large customer of ours. We're working now with the German military, with some other allied nations' military. And again, it goes back to recognizing their shortcomings. Not necessarily spending, but resource allocation, what they did or did not anticipate properly, and now they're almost playing catch-up, in a sense, recognizing that front lines have changed dramatically and are going to continue to do so as aircraft have more and more capabilities. And so, there's a lot of. I mean, we're certainly seeing it in the deal flow that the increase in demand is there.
Yeah, in terms of budget, that's the budget. Really. That's what we said before. So as clients, of course, they're here. As producers of technology, is much less.
Yeah. In the build-buy decision right now, they're less building. Yeah.
Well, this seems like a really good place to wrap up. There's more here for us to talk about. If there's anything we missed, maybe you can take a shot. But I think we've covered a lot of the big topics here. So let's have some fun, and we've got 4 questions. We'll ask you each to do them independently, rapid fire. Start with you, Yonah. Worst business advice you've ever received?
The worst business advice I've ever received. The worst business advice I ever received was from a law firm that asked me to stay. It was my first firm out of law school, actually, and I had mentioned to a partner that I wanted to leave, and he was like, "No, it's a great future here. It's going to be great." I just had a sense something was off, and I wanted to go. And he said, "Please stay. It'll be great. We've invested so much in you, to get you trained and da-da-da." Within 6 months of my walking out the door, the feds came in, wiped the place out. The senior partner ended up in the Federal Witness Protection Program. And I got a phone call to the DA's office to be questioned about what I knew what was going on there. So that was really bad advice.
All right, that qualifies.
I'm glad I didn't
That
take
qualifies. Personal business icon?
Can I put aside the big ones like
sure. This is anybody
Musk
who
and Jensen and Munger and Buffett?
Personal.
And Michael Eisenberg. I can put him aside too.
Yeah, why?
Personally, it's David Stern. Do you know who David Stern is?
Basketball?
Yes.
NBA?
You do. Yeah.
I like that.
And I worked with his son. I got a little bit of an intimate knowledge of David. Yeah, well, more than that. He had been general counsel because he came out of Proskauer. He was a lawyer. Yes. And then he was counsel at the NBA. And they gave him to be the commissioner. And he changed everything.
Well, he was there. He started in the, let's call it the bad days of the late 70s, early 80s.
It was a bad time. The players were juiced bad,
To use a nice term?
To use a nice term. And it was a dead brand. And again, I'm coming, let's say, from a SodaStream background where I'm thinking branding and revival of branding and what can we do to take something that's actually good, but nobody knows it's good. How do we do that? And David was just brilliant. And his son Andrew, who worked with me at the DA's office, used to tell stories just like his passion and how he talked about, how am I going to do this? What am I going to do? And he internationalized the whole brand quickly. He brought the international players in, and the whole Olympics thing that was going on. And next thing you know, it became, what it became. So and I'm a basketball guy. So watching what he accomplished, pretty amazing.
Favorite Israeli junk food?
What used to be Sammy's Burekas. They're not around anymore.
All right, that
Remember
counts.
Sammy's
That
Burekas?
counts. Burekas look due.
But now it happens to be Israeli cottage cheese.
Really? But that's not a junk
Not a
food.
junk
not
food,
junk
but I
food.
eat it like junk food every day. It's good stuff.
And the last thing you changed your mind about?
Well, the last thing was, as you know, my parking spot this morning. But the last serious thing, it doesn't have to be a business thing, right?
It does not.
Country music.
Me too.
Right on. Country music. So I like music, but typically stuff that I grew up with, right? Classic rock and pop and whatever. And my wife's friend is from like this hick town called Frederick, Maryland, and loves country music and got my wife into it and started playing it on Alexa constantly. And I hated country music, right? I know
New country is very different.
very different. Like it's not just trucks and beer and whatever. It's funny and it's talented. So that was a big shift for me to appreciate the value of that. Yeah.
Amir, it's your turn, but Michael's going to ask you.
Okay.
All right. So the worst business advice you received.
Difficult to. I mean, it's probably investing in one company where originally we did well because the company went public, and thankfully most of our clients managed to get out in time so as to not lose money. But after that, a couple actually stayed, and the company pretty much tanked, and it's difficult.
Yeah. Okay. Personal business icon.
So I'm gonna give you a name probably nobody has heard of. It's a friend of mine called Eyal Orion, and we invested in 4 of his companies, and he created 5 medical medtech companies, and 2 have already been sold. One of them we invested in. We sold it for almost $500 million 6 months ago, called Victorious. And the other companies are also doing well. And we're anticipating more exits. And this is an Israeli guy. And it's not one success. It's like going to 4 or 5 successes out of 5 companies. It's very unique, I think.
Yeah.
At the same time, it's not one after the other. And it's over a long period of time in a very challenging and complicated industry. And it's very impressive.
Definitely. Favorite Israeli junk food?
I don't eat junk food so much, to be frank.
Or snack, maybe.
I try to avoid because I'm fat, so I don't know.
We started off the conversation saying you don't talk about weight, so you can pass. What did it used to be?
Or favorite Israeli food?
Okay. I don't know. Salads. Can I say the Israeli salads?
You can.
Yeah. Israeli salad. It is
Sure.
actually
Fresh.
It's on the menu, yeah.
Yeah.
And the last thing you changed your mind about?
Well, I'm a compulsive optimist, generally. But I have to say that the social state of Europe is and of America is very concerning. And I used to be always very optimistic, and I'm a bit less optimistic now, at least for the short term. And it's a big thing, and there's have a long conversation. But I hope I'm going to be able to soon change my opinion again.
Well, guys, I think we went into theme 7. I think we've gone through it, talked about Europe, and brought it to a close. So thank you very much for participating.
Thank
We
you
were
for
great to have
inviting
you
me.
here,
Thank you for having
and
us.
I think everybody enjoyed. So thanks.
Thank you.
Thank you.